What was your take on those Apple earnings, especially that guidance going forward related to the chip shortage and that commentary from Tim Cook that you could see was pretty cautious?
Yeah, I mean, it's not very surprising. I mean, the tone, especially surrounding the global chip shortages, has been fairly cautious. I mean, you're not going to get paid handsomely to kind of try to be a hero and downplay it. Musk has flip-flopped a little bit over the past several months on the semi shortages, but it's kind of just a reality right now facing almost every major tech player, and Apple's obviously top of the food chain. And now where Apple's been a lot more insulated is because they are the number one consumer of chips, and they are going to get favorable treatment from their key suppliers, especially Taiwan Semi at the leading edge. So I don't think, at least in my conversations last night and some of the notes I've been able to glance over this morning, no one's really worried over the long term. Maybe we see some of the iPhones get pushed out a quarter like we saw last year, but they're not facing a demand issue. More importantly, it's more or less just a timing issue. So for Apple, people are picking a little bit at kind of lingering supply constraints, no explicit guidance moving forward, but overall phenomenal quarter, as you kind of highlighted some of the major components of the beat.
All right, let's move on now. Alphabet and Microsoft. Alphabet's second quarter profit more than doubling, easily beating forecasts, revenue jumping 62%, with the company generating more than $50 billion in ad sales, up from nearly 70% from a year ago. Incredible growth. The stock higher in extended trading and is up more than 50% this year. Microsoft's fourth quarter profit rising 47%, with sales topping $46 billion, beating analyst estimates. The company's cloud business, Azure, saw sales growth of 51%. The stock initially falling after the results, but headed higher after Microsoft says it expects that growth to continue. Let's go back one, Joel, if you don't mind. Let's talk about Alphabet. Ad sales are obviously a big part. Also, YouTube, something that's, a business within a business, a big part of the company. What was your take on what you saw from the earnings results?
Yeah, I mean, Alphabet, it still remains my favorite large cap growth pick. I mean, for continued YouTube momentum, explosive digital ad results, and just continued focus and acceleration in their cloud unit. But you hit the nail on the head. YouTube growth is phenomenal. And talk about a unit, that continues to benefit from the secular shift from linear TV to online video and streaming. And that trend is not slowing anytime soon. YouTube growth was 70%. And again, I mean, they're just explosive results in terms of on the digital advertising front as well. And there's nothing to pick out at Alphabet. And I think you could argue, going back on a multi-year basis, Alphabet's probably been the most underweight amongst the FANG members. And I think this year, you're starting to see an investor base, kind of continue to warm up to the story even more. And I think this is a stock that continues to work and hands down the best print in tech I think we've seen up to this point of the earnings season. And you're going to see a material upside to consensus estimates.
One more question about Alphabet and that YouTube growth, something I really saw and kind of caught my attention from a personal note. I also look at YouTube as, a podcaster competing with Spotify, a music site. Is that potential for the site, in addition to the fact you can watch sports on it, has that already been priced in to Alphabet?
I mean, to some degree, but I think if Alphabet's got right now, they have so many, different big parts of the business that seem to be firing on all cylinders, which makes the sum of the parts thesis still relatively undervalued. So YouTube, the runway is they have a lot of runway ahead of them, and they continue to innovate. They keep up with times, despite all the other kind of competitors that have entered the streaming world over the past 5+ years. Seems like YouTube's always at the top of the chain and will continue to attract massive advertising dollars. And so until you see a shift where maybe the growth is decelerating, but it's just, they literally just put up eye-popping growth, quarter after quarter, and as they continue to innovate along the way.
Yeah, absolutely. All right, one more tech giant to get to, and we want to get your take on. Facebook reports second quarter numbers after the close today. Profit is forecast to grow roughly 70% to $8.8 billion. Revenue is projected to rise nearly 50% to almost $28 billion. And Facebook's monthly active user base is expected to grow more than 7% to $2.9 billion. The street's looking for a substantial beat and bullish guidance, even as the company faces antitrust and misinformation allegations. And it may actually feel the effects of Apple's new limits on ad tracking. What's your take on the potential for that 7% user growth with so much competition out there for just eyeballs and just in the digital space?
Yeah, I think with Facebook, it's similar to Apple, Microsoft, and all really the mega caps. To me, positioning is the number one issue for a lot of these stocks. U.S. tech has become a lot more crowded over the last several days because of Snap's blowout results last Thursday. They continue to benefit from the China implosion that's been underway as well. So I think for Facebook, we know the business is performing well. We heard that from Alphabet, Snapchat, and Twitter up to this point. The key for Facebook, what you want to really be watching is their commentary on the second half. They've been very cautious on revenue decelerating because of Apple iOS changes on the ad front. And that's going to be the key. Is they've been very cautious and not trying to get investors too worked up that they do expect revenue to decelerate in the second half. So that's where the stock's going to work. If they kind of continue the being relatively cautious here in the year end in the back half, I think the stock you'll see a little bit of travel and arrive reaction like we're seeing with Apple right now. But fundamentals are phenomenal. I don't think you can kind of argue the growth, scale, and margins at a lot of these companies. But again, positioning is an issue with Facebook. We're always probably a top 2 most crowded stock on planet Earth. So to me, look for the second half, commentary on the business, but the quarter is going to be phenomenal.
Joe, one more quick question before we let you go. Speaking of crowded trades, we saw a lot of people pour out of those Chinese internet names. Is that money going into U.S. mega cap tech names? Will it continue to go into those names as this Chinese crackdown continues?
Yeah, I mean, 100%. I mean, you pull up the holders list at whether it's Tencent, Baidu, even some of the education names that have just gotten carried out to the woodshed. These are all Western institutions at the top of the holders list. So clearly, risk controls have been being put in place aggressively over the past week or so. And what do? You sell Baidu, Tencent. You really don't have much time to react because you wake up and there's just a negative headline. And you've seen all this money just flowing into a really select group of large cap names. And I think yesterday was the first sign that I've seen where that process is winding down a little bit, which again could be a near-term headwind for some of the big cap tech stocks, which makes me think the upside in the near term somewhat limited. But again, that process will work itself out over the medium, long term. But yeah, I mean that's another issue on the positioning front. Just a lot of that Chinese tech money had just been forced into the FANG complex.
Shepard Smith here. Thanks for watching CNBC on YouTube.